Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thank you very much for joining us. So today we're going to go further into the TIP Trend Investor Pro Indicator Edge plugin for StockCharts ACP. We're going to look at the normalized rate of change, which you can use to identify outsized moves up or down. And then we're going to look at two volatility indicators so we can decide when volatility is rising and potentially bearish and when volatility is falling and potentially bullish. So we're going to start with the normalized rate of change. And this is an indicator I like to use to identify an outsized move. And an outsized move is important because if you're trending higher and you suddenly get an outsized decline, that can signal a trend reversal, a bearish trend reversal. Similarly, if the market is trending down or a stock is trending down, or if it's flat and range bound, and all of a sudden you get an outsized move to the upside, that can be a bullish sign to signal the start of an extended uptrend. So I'm here on the StockCharts ACP charting platform. And if you don't see the plugins, then you need to click the plugin icon there on the right. So there you can see all the available plugins and Trend Investor Pro Indicator Edge plugins already installed. It's 10 indicators, $49, not going to set you back a lot. So I'll go back to my chart list here, and I'm going to add that first indicator. And so you'll scroll down, and at the bottom you'll see your plugins that are available. And I'm going to choose Normalized ROC. So the default periods are 20 days, and this is the absolute rate of change over 20 days. So it's the close minus the close 20 days ago. And then you divide that by the 20-day ATR. And what that does is it kind of relativizes that rate of change. It puts it into perspective, and that can be compared against other indexes or stocks or ETFs. If you have a high normalized ROC, that means there's a little more oomph, a little more volatility in it. If you have a lower normalized ROC, a little bit less. You got an upper and lower reference line, and I'll go ahead and open this up so you can see how that works. So you just hover over it until you get your double arrow and then drag it up. So you can see I've got the upper and lower reference lines there, and I'll just leave them there for now. I got some more examples coming up. But you can see here we had an outsized decline to start that reversal in February. And it continued into March. And then we got an outsized advance in the middle of April. It wasn't at the exact low, but hey, we're not going to call the exact low every time. And you can see we've been getting outsized advances throughout, and we have yet to get an outsized decline based on these settings. Now, these settings, of course, can be changed. If you want it to be more sensitive, you can change this to 5 periods for the rate of change. I would recommend the same setting for ATR to keep it uniform, so 5 ATR periods. And so we can see we have the upper reference at 3. So we still got the outsized move to the downside in late February, and we didn't get an outsized move to the upside until early June. And that actually called that top before we had a consolidation. And we did not get an outsized decline there on the 10th of September with that sharp decline. But that's how the indicator works. Let's look at some examples with individual stocks. So here's an example using QQQ, and you can see I've got the rate of change at 5, the ATR at 5, and I've got the upper and lower reference at 2 and -2 respectively. And if you look here, you can see we got an outsized move to the upside there on June 7th, and we trended higher, and then we got an outsized move to the downside, and it took a while to stabilize, and we got a little bit of, well, we got an outsized move there in early September 2019, and that led to a big advance. And we also had a big outsized advance on October 15th. And then you can see we extended higher. So this move lasted until, again, there you can see in February, we got the outsized decline to signal the top. And then this is a more sensitive setting. You can see it's at 5, 5, 2, and 2 again. But we got an outsized move to start the advance. And now we've recently got an outsized decline here in September 2020. So it looks like we're moving into either a correction or some sort of decline because we've had an outsized decline after a big advance. So here we've got Amazon with the default settings 20, 23, and -3. And there will be some whipsaws. You can see we got an outsized decline there and then had a new low, but then quickly got an outsized advance. But that didn't last long as we got an outsized decline. And Amazon stayed pretty quiet for several months. But look, during this trading range, all of a sudden, you had an outsized advance. And that suggested that buying interest was picking up. And buying interest stayed pretty strong. You had the gap up. And then we got the outsized decline there that was in early March, March 9th to be precise. Amazon didn't get the outsized decline with the rest of the market. But again, this is 20 days. And then you got an outsized advance in early April, and that signaled the start of a really big advance. So Amazon's still on a bullish signal. And keep in mind, you can adjust the sensitivity using those settings on the left. So here is Kraft Heinz, and this time I've got 10, 10, 3, and -3 for the settings. And you can see that there are going to be some whipsaws here, from May 2019 up until this bearish signal in November. We had some whipsaw signals as Kraft chopped around there. But then you avoided this decline here. And then we got a pretty good bullish signal here. And then the decline with the outsized decline there in early September. And so what the deal is as a trend following indicator is you're going to get whipsaws. And the idea is that a few good trends are going to pay for those whipsaws. The bigger gains are going to pay for those smaller losses is the idea behind trend following. So at trendinvestorpro.com, I have been covering these outsized declines. That started on Thursday as I started noticing some, and then we covered it again a little more with the market timing models on Friday. And then the weekend video puts it all together. We go over all 60 charts in the core ETF list, as well as the recent timing signals and those outsized declines. And also note that I just put up a video on using the 65-day RSI as a trend following strategy. And I compared it against 5 other trend following strategies and tested those over a 20-plus year period using stocks in the S&P 500. So come check out trendinvestorpro.com if you want to see these articles and view these videos. So now I want to turn to a pair of volatility indicators. And volatility is a very important part of the market timing puzzle because in general, high and or rising volatility is associated with market weakness, whereas low and or falling volatility is associated with market strength. And by that, I mean the S&P 500 or SPY. And I do prefer to use these indicators mostly for SPY and QQQ, but you can also use them for stocks and ETFs to find out if volatility is rising or falling. Because a low volatility event can be the signal of a consolidation and look for a breakout. A high volatility event can be a sign that things are getting a bit out of hand and you may want to pull back a little bit. So if we look at the left-hand side, we can add these indicators again at the bottom. So I'm going to click Normalized Average True Range. And this is the ATR, average true range, divided by a simple moving average. And so if you choose 20, that's going to be a 20-day ATR divided by 20-day SMA to keep it uniform. I could change that to 10. It would be 10-day ATR divided by a 10-day SMA. I smooth it with 10 periods. And you can also add a signal line. It's not there now, But if I put a 10 in there, you can see we get a blue signal line. And I'll go ahead and raise that window up. So you can see when volatility is rising, and you can see when it is falling. The second indicator is high-low range percent. And this is pretty similar. It also shows you when volatility is rising or falling. It's the high minus the high-low range divided by the close. So the bigger that range relative to the close, the higher the high-low range percent will be. And I smooth it out with a 10-period moving average, and you can add a signal line to that by putting a 10 there, and I will update that, and there you can see the signal line. So I'll close it, and now we can see when volatility is rising or falling. So here is SPY with my preferred settings for these two indicators. First, for normalized ATR, I just put it at 1. So that's ATR divided by the close one-day SMA. I smooth it with a 5-period moving average. So it's green when it's below 2, which is the reference line. It's red when it's above 2. And then the blue line is a 10-day moving average of that histogram. And then the other indicator, high-low range percent, I put it at 5 for the smoothing periods of that histogram. And you can see it's red when it's above 2, and it's green when it's below 2. And then I've got a 10-period moving average is the blue line there. So what signals are we seeing here with these indicators? Well, you can see that we get these volatility pops, and they tend to be in the same time because these indicators are correlated, as they should be because they're volatility indicators. Sometimes you get red on one, but it's not confirmed by the other. But what you can see in general is we have this advance, and we have low volatility throughout that advance, green and below 2. Same for high-low range percent. But then we start getting some volatility, and you get the correction or the decline. And in between, you know, these big moves down, you have some low volatility events, and then you get a nice advance with a lot of low volatility. But then we look out and see what happened in February, March. There at the end of February, we saw that uptick in volatility, and it was rising. And the market didn't bottom until the latter part of March, and you saw volatility falling. Both indicators were falling. So that was positive, but it took a while to settle down. And then you can see in July, both indicators for the most part were below 2, so volatility was low during this advance here. Now, more recently, we've seen a little uptick in volatility. It calmed down a little bit, but that's a bit of a concern, so we might need to watch that closely to see if volatility ticks back up again, because that would be negative for the stock market. So if you want to know more about these indicators, to see some written commentary with some chart examples, you can go to the help link at the top right of every web page, and then that'll take you to the support center. Choose StockCharts ACP, StockCharts ACP plugins, and you can find information on the Trend Investor Pro Indicator Edge plugin. So next week, we're going to go over the momentum composite for mean reversion signals. And that's a wrap for today. Thanks very much for tuning in, and have a good one.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.